Oh, sorry, and you have to excuse my daughter. I guess she's very excited. Okay. All right. Where did my slides go? Huh. Oh, here. All right. Okay, so this of cost of goods sold schedule, right, is mirrored in the income statement like this here. You see? Direct material beginning inventory at purchase, direct material available, less ending inventory, you get direct material put into production, add direct labor, add manufacturing overhead, you get total manufacturing incurred here, and then work in process items during this year applied, less the ending work in process, you get cost of goods manufactured, beginning finished goods inventory, adding the finished goods over here. Adding the cost of goods manufactured, you get over here the finished goods available for sale, and less the ending inventory, you get cost of goods sold. Right? It's the same thing you see here. They just presented it differently with the numbers. But if you were to see this directly without looking at this, it's probably very difficult to understand what it really is going on behind the scene. Right. So an easier way to understand this is by looking at T accounts, a series of T accounts. So we have first the DM account here. We have a WIP account here. And we have finished goods account here. Right? And how do we account for the direct material expensed? Is here. The beginning balance, BB or BI, either way, plus purchase. Right? And then minus the CG, the direct material used. Right? That will give you the ending inventory. So that's good. And over here, you have your beginning WIP plus over here, the DM used plus direct labor plus what? Manufacturing overhead, right? And then minus over here is what? Cost of goods manufactured, right? And now we have ending WIP here. So over here at finished goods, we have beginning finished goods plus this item here, CGM. If we transfer out is the cost of goods sold. And then over here, we have ending finished goods. That's it. It's the same thing as what we saw earlier over here. Right? We just represented in the form of a series of T accounts. Right? You don't need to like worry too much about this thing on the income statement. Sometimes they add things like that, total manufacturing costs incurred, and then this here, the finished goods available for sale. You don't really need to worry about that in T account, because if you really want to add that line in T account, it doesn't make much sense at all. Over here, you have that beginning finished goods inventory plus CGM, right? Before taking out the CGS, you have total finished goods available for sale. Now, you don't need to track that in the T account. All we need to do is just the part that's taken out, right, is the cost of goods sold, right? Because after cost of goods sold taken out, we have the ending finished goods inventory, right? So same idea as what we've seen earlier. So if the FG is a BFG plus purchase, right, minus the cost of goods sold, I will still give us the ending finished goods or ending goods inventory, right? But in this case, we are buying instead of making. Therefore, this is, I would say, the retail way of accounting cost of goods sold, right? So that's good. So there are many ways to take a look at the exact same thing in management accounting, right? The idea is not to memorize, okay, this schedule here, but rather try to understand what the schedule is trying to do to you, right? That will make it a lot easier for you to understand. Okay, so for the exercise or when you're taking exams, if you see any kind of this cost of goods sold schedule, right, or calculated any item in the cost of goods sold, the best way to do that is just draw 3 T accounts side by side: DM, WIP, FG. And we know the thing transfer out over here is COGS. The thing transfer out here is COGM, cost of goods sold manufactured. The thing transfer out here is DM used, right? And then we know ending DM, ending WIP, ending finished goods, right? And beginning is always the same. Beginning DM, beginning WIP, beginning finished goods, right? And DM is very simple, plus purchase. Okay, but when it comes to account for the WIP, we have to account for this DM used, plus direct labor, plus manufacturing overhead, okay, and then taking out COGM. So we know over here is plus the COGM here, right? Take out the CGS, it will give us the ending finished goods value. Easy, right? Yeah. Good. Right. So you have to excuse me. I'm really tired today. I literally can't go on. So this is the essence of what I want to teach you today. Okay, and you are able to use this formula to solve almost every one of the income statement type of questions in chapter 2, and the income statement type of questions or cost of goods sold schedule will be on the midterm for sure. Okay, you will have to learn. Sometimes is they want you to calculate this Sometimes they want to calculate you to figure out what's the beginning WIP. Sometimes they want you to figure out what's the DM used. They may switch around, right? If you try to memorize every little formula, right, instead of putting them together, I guarantee you, you'll go crazy by the end of this 5 weeks. Don't try to memorize this little formula here and there. Look at it all together, right? In this way, that will help you, right, digest this whole thing a lot better. Good. Okay, so anybody want to drop from the course? Too much work? Let me know. I won't take offense to it. It's fine. Right? But it's like this, right? My courses are like this. Some of you took my class, it's a lot of lectures, usually a lot of work, but I can guarantee you will learn things, right? Right, good. I'm too tired to go on. I want to take a shower. I want to go to bed.
Good night, Professor.
All right. Good night.
All right.
You guys have any questions?
No. Oh, can you post your YouTube link channel?
I think it's still streaming right now. Oh, you mean the channel?
Yeah.
Oh,
Yeah.
okay.